Well, there is trade war uncertainty, and for investors, there's lots to navigate these days. But over the long term, there is always a lesson learned in the best strategies for investing. And our next guest has had plenty of success navigating through uncertain times, whether it was the 2000 dot-com bust, the 2008 financial crisis. In fact, since 2012, his funds have delivered more than 600% cumulative returns. What's the secret behind his success? James Cole is Senior Vice President and Portfolio Manager at Portland Investment Counsel and joins us now. James, great to have you with us. Thanks for your time.
It's a pleasure to be here, John. Thank you for having me.
There's obviously the short term and the long term. And in the short term, we've got plenty to talk about these days. But in your career, what are some of the lessons that you have learned in navigating during what are perceived uncertain periods of time? Because you've been through a number of market cycles, and as we mentioned, you've had pretty good success along the way.
I think the biggest lesson is to be investing for the long term in common stocks, John. Among the three major asset classes, stocks, bonds, and cash, the traditional asset classes, I've always believed that stocks would deliver superior returns over the longer term. They always have, and logic and the facts suggest that they'll continue to do so. And so we've been invested heavily in common stocks over the long term. And in fact, the Portland Focus Plus Fund LP uses leverage, uses margin borrowings to enhance those returns by investing in common stocks, which has enhanced the returns by delivering returns higher than the cost of the margin borrowings.
And does that mean you have to have, I guess, a certain level of conviction around a particular company, a particular investment, a particular stock, or a particular sector if you're making that long haul commitment, and even in some cases sort of, involving some leverage in the investment decision?
We certainly do very focused investing. Those are the two hallmarks of the Portland Focus Plus Funds: focus, a limited number of companies and large percentage weights, and leverage, a variable amount at my discretion to seek to enhance the returns. So we run very focused portfolios. For example, right now there are only 6 holdings in the Portland Focus Plus Fund. So it's very concentrated, and that has been worked out for us over the long term, although it's volatile from time to time.
So against that backdrop, how would you define so-called diversification? I think there's so many people that are interested in the markets these days, and so many people that are interested in all kinds of investments out there. But how do you define the term diversification?
Well, I think if you're an equity investor, you can get highly diversified by simply buying, an exchange-traded fund, if you will, an S&P 500 ETF, and then you have diversification across 11 industry sectors and 500 companies, and that's all fine. I don't have any particular objection to that strategy, other than I'm seeking to do better than that, and we have over the long term by being highly concentrated. But I will joke sometimes, don't try this at home. I really don't recommend that lay investors run super concentrated portfolios.
The other question, I think, for a lot of people is when to buy. And there's a lot of lessons you can share with our audience about positions you took in investments at certain times, maybe periods in time when a particular investment was less loved than others, because you had done your homework and saw the opportunity. I mean, are there any examples of that you can share with us?
I'll give a little long-term perspective and then a recent example. I'm actually third-generation investment business, so I remember well when our family bought the big fancy house in Toronto in 1969 at the top of the stock market, as it turned out, and sold that fancy house in 1974, at the bottom. So I've been living these cycles since the 1960s. A recent example would be last fall. We took a large position in Toronto Dominion Bank. At the time that they had resolved their anti-money laundering issues with a major settlement, multi-billion-dollar fine. And TD was very out of favor. This is just last October. And it was about $78 a share, and now it's 101, and it's had a very good dividend yield in the meantime, and that's only been in about 9 months. And I had people questioning me at the time, what are you doing investing in TD? Don't you know they've got these problems? Yeah, when it's all over the front pages of the newspapers, it's already in the stock price. That's the buying opportunity. And I understood the financials well enough to know of TD by that intensive research that this too shall pass and that it would recover in time, and turned out not very much time.
And James, when it comes to the investments that you are making on behalf of clients, what is your philosophy around being invested alongside your clients? In other words, just having skin in the game yourself.
Thank you for that question, Don. It's an excellent question. I have 100% of my RSP and my tax-free savings account invested in the Portland Focus Plus Fund, the trust fund version of the fund that we launched in 2016. So we're investing right alongside investors, eating our own cooking, as we like to say, or having that skin in the game. And it's one thing we look for in the managements of the companies in which we're invested too, is that they are have a keen sense of fiduciary duty, that they are have symmetrical outcomes in terms of gains or losses right along with the public shareholders. So that's what we have in the funds.